Welcome to Momentum Monday. Today is October 23rd, 2022. Howard, what's going on?
So I'm going to get you on a gravel bike at some point. I think you would really enjoy kicking my ass on the road.
Well, I doubt that I'll do that since you have much more experience and leg muscle, but
Are you doing F45? What kind of training are you doing?
No, I'm just, I sign up to a different gym, so I just take different classes.
Oh, your urban classes. All right.
Yeah.
Well, I do think it's a good news, bad news. I think we have a tradable type of market right now for a few months.
It's still a high correlation market, and it's still some macro relationships are kind of overshadowing earnings season so far. I mean, for example, on Friday, we saw the Bank of Japan intervening and trying to protect the Japanese yen, which caused a pullback in the US dollar and a bounce attempt in US treasuries. And this is why equities really bounced on heavy volume on Friday. So still those macro moves have a big impact. The moves in Forex and in bonds have a big impact on equities. But yes, you're right that on Friday technically is considered a follow-through day according to the IBD methodology.
Yeah.
You have that.
I think
so you can put some money to work, I guess.
Yeah, I mean, if you look at the reversal, again, it's going to come down to bonds and it's going to come down to the dollar here. JC, go with the hot hand. The trend followers have been right? Like, but I think it's the first time in my life I bought AGG with a big chunk of cash on Friday. It's a knife. It's a falling knife. There's just no reason. But what have you got? Like a year of red. You've got almost a year and a half of red selling with crescendo type price action. And the Fed will flinch. I don't think it'll flinch on US regions. I think it'll flinch on some kind of blow up elsewhere. What is it? The worst year on history for 60-40, which everybody is in. It'll probably be, and we'll get to it later, the worst year or 2-3 years of returns, pass through this year in venture capital. And it's one of the worst years, not for the QQQ or NASDAQ 100, but for software and internet and China and so many trend changes. So with these trends changes, and I'm getting into it on my blog, comes opportunity. I think the biggest head fake, Ivan, has been the VC rush to crypto, blockchain, and metaverse. And I think the public markets have been warning people of that, but I think the real exciting stuff is going to happen in internet and AI and creative tools and media. I mean, the amount of, and they're not great tools yet, but like dumbed down AI tools I wrote about today for guys like me and you to like write content and create all kinds of cool stuff to share, and maybe not even just for us, but for just creative people, from Canvas to Figma to AI. I think we're going to have some kind of new weird revolution in the real world and internet. So I'm pretty excited, actually. I'm like, when you have this bear market happening, you have to kind of refocus. So you're right. Like, we're still below the 200-day. The macro is still in charge. And
we're still below
positive signs, but there's some positive signs.
Absolutely, yeah.
Yeah, and if you look at that reversal last week or a week, just late last week or the week before on the negative inflation number, and then you look at the price action at the end of last week, I think there is some opportunity. Now, a lot of that price action came from energy that just rip it. And I own some XLE. I don't know. I own some XLE. So my two ideas that are just are so boring, XLE and AGG right now, just to put some capital to work in case these trends continue. And some QQQ I added last week. But, I think a lot of in a bad market, I'll go through some of my charts, but in a terrible market, the tailwinds of this, like, mathematically, or the quants are all saying this is seasonally a good time to get along amid blah 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 presidential cycle. So you've got all that happening. And Goldman came out saying, there's natural buyers over the next 6 months versus sellers, but those things all tend to work when the markets aren't in a bear market. And so, like I keep harping on here, when we're in a bear market and the indexes are below the 200-day moving average, like, expect surprises to the downside. So I don't think all these things will work as well, but sentiment is so bad. So XLE, is there anything that in XLE or biotech that kind of
I mean, the biotech actually has been weakening, so it's basically all down to oil. So this is the thing that every time lately equities have been rallying, oil and other commodities are leaving. And we don't really want to see that, because that means that inflation expectations remain high and the Fed is likely to continue on its course of raising rates. We want to see, some of the growth, tech companies, healthcare, biotech starting to lead, which we're not really seeing. I mean, last week when interest rates really perked up, there was one day, I think on Wednesday, when biotech was hit pretty hard. It was down 5%, really close to losing the previous week low. And if it goes under 75, I think it can revisit its previous low. So yeah. Biotech is not really the sector leading right now, as I said.
Okay. I know we were talking about it, so that's good to follow up.
It's deteriorating. I mean, there are like 4 or 5 names there. They're kind of holding well, but they're such small companies that I don't think they can make a big difference.
And then we had been talking for months about solar. What's that doing?
The same thing. It's been deteriorating. Probably it'll find some support at some point, because I noticed the past week or so some really tiny small cap US-based solar companies, running 100% or so. So there's some speculation there for sure. So it'll probably be more like range bound. I mean, I guess the silver lining for bulls is that we're very early in earnings season, and so far the reactions have been mostly positive. At least, I mean, when it comes to banks, everyone was so afraid that they're going to write down, big losses, just preparing for next year. And but so far market reaction has been really good. Banks are up 20% after earnings.
Gold looks good. It's interesting. Got a couple ideas.
So this is good that the financials are holding. We're seeing a lot of companies that are kind of missing estimates and are rallying. Alcoa is one of them. And
go ahead.
One last thing, and then I'll let you continue.
Sure.
So defense stock, very strong wing for defense stocks. LMT came out, Lockheed. They barely beat estimates, but the market reaction was very bullish. Look at this huge candle. They went up on what? 300% their average volume, broke out, building a new base. The entire sector super strong. The entire defense sector, like almost any stock in the sector, is just looking super bullish. Like I don't know what the market is trying to price in. Probably more military spending around the world, not necessarily a war, but just more military spending for the next few years. So there's definitely a lot of.
Will you share this list in your update? What's this? Huntington? Holy smokes!
These are all
they're all
stocks. Yeah.
Okay, will you share these tickers in your update?
Yeah. So this is what's going on currently.
Okay, well that's real sad, but real leadership. That's just the government's going to spend money and ship weapons around the world.
Yeah, around the world, everyone's going to be spending more.
But there's also that undertone that like China and Taiwan, like a lot of people that I follow out of China newsletters is that don't underestimate that China by 2024 is going to go into Taiwan. If you look at the Chinese web stocks, it's just, they're done. Like I can't,
Yeah, it's been
there are so many bottom fishers and
this is
they
monthly.
are
I look at
jetting.
monthly. Wow.
Yeah, no, there is something bigger brewing. China just doesn't care. And American institutions don't want to own this shit. There's something bigger brewing. It's very scary. That goes to your macro stuff that like, people, the tone is so negative and you're getting a rally, but you're not getting a great rally because I think the macro is so bad. And, so it's not like you can get these rip roaring bear market rallies of 30%. You're getting these 10%, 8%. I don't know, there's been 6 or 7 of them over the last year, but they're not these crazy, scare the short rallies. So yeah, I think you got to lean on. I'm gonna, if you don't, so defense. You see the the rail stocks are breaking down. That was like a Buffett favorite. I don't know, Union Pacific.
I mean, I don't
Yeah,
really see
these
them
were
breaking
leading.
down. They're just near
they're-
52-week lows.
Go to the weekly. Go to the weeklies. Yeah, I mean these are ugly, and these have been leaders in the transportation. So you've got freight prices coming down, recession type stuff. The weird thing is energy going up, and it just could be because they're not producing anything. Because kind of like the housing market, like the housing stocks are getting hit, but there's not a ton of supply because they didn't get sucked into building a lot of stuff this time. So it's just this is one of the toughest, trading environments I've ever seen. I just want to walk through the banks here quickly, Ivan.
Okay. Are you sharing your screen?
No, you can try. I want to pull
Okay,
up.
then.
I want to just. There's not much to share. It is interesting to see these kind of try to bottom on interest rates, and it's not like these are growth stocks, but
No, they're not.
it's good to see them get a bid, showing that we're not in some kind of 2008 scenario here in the US. But it was interesting because Schwab, which is a broker, which should just be able to print money off the spread, can't really get a bid. And then obviously the startup proxy for brokers, Robinhood. I had a couple thoughts here on Robinhood. I don't have any inside info. Is that a weekly? Where's the daily?
That's a weekly, all right. Here's the daily. I mean, daily is like a flat line, basically, the past.
Yeah, but here's where the opportunities are. I'm not recommending Hood, although I've been a small buyer of stock here, and I don't have any inside info. But here, what's the market cap here? Here's where this
9 billion.
Okay. So it's fun to be bearish, but here's a couple things I've noticed about this. And again, like I don't know where the market's going to do, and that we could argue this is massively overvalued still. But here's where some of the opportunities are going to come. And it may not be Robinhood, could be Airbnb. Some of these Web 2 leaders, where when they come out of this, when the market comes out of this, they have such moats because there's going to be no competition in these spaces because no new companies can get started. So going back to Robinhood at a 10 billion valuation, it was 40, it was silly. Now we're down to 10. They've got, let's say 50 million users. So there's going to be nobody getting funded to compete for the next 5 or 6 years, right? Because you can't buy the customers. And then if you look at Schwab or Goldman Sachs, the people that were nervous about them, where's Schwab at? How many billion?
133.
133 billion. So they dodged whatever bullet or competition they thought they were going to have. Same with Fidelity and Goldman and JP Morgan. So Robinhood now sits alone to build product, to grow, when they're not going to have much competition from below because there's going to be nothing but bankruptcies or acquisitions of these small fintechs that can't get traction or buy customers. And the Schwabs and Goldmans just don't care because they're under the radar. So I think in this $5 to $10 billion, broken IPO companies that actually have a moat and potential to grow, there's going to be a really big batch of 3 and 4 or 5 baggers when we come out of this bear market. So that's what I'm starting to look for in Web 2 to really juice my returns. Okay, and you're starting to see this in some of the big ones. Look at Netflix, written off, and we've been talking about this. It was fun to sell it, easy to say. There's so much competition, and they're now they got to go do ads, blah blah blah. But listen, it's very hard now for anybody new to get traction and come into this space. And Reed Hastings is back in, the founder is running that company, and back focused on the brand and the company. So there are going to be all this extra bearishness wrapped up is going to lead to opportunities in some of these things. And then going back to Hood, for about a year, and rightly so, probably, if on StockTwits, it was so negative. I couldn't go on the stream without hearing, I hope they die. And, the sentiment was so bad. No, not GameStop, but the sentiment.
I mean, that was the situation, the GME. Yeah.
So, right or wrong, the sentiment was horrific, and the sentiment was dead on, right? Now, if I go to the Robinhood stream, it's a whole new crop of people that have flushed through it and like the product. The war is over in many sense. The people that hate it, but the sentiment has slowly, I wouldn't say gone positive, which would make me nervous, but it's just stopped. I hope they die. And I hear people talking about how they like the product and how they're using it properly. And I was looking at Robinhood, they're offering at 3% cash, and their the content's pretty good in terms of education. So again, the tide for some of these Web 2 kind of second tier companies, they're going to have a lot of open field as the world moves on. So I want to end it on some kind of positive note, but Netflix is showing.
It's almost doubled since the lows. Basically.
Yeah, it's going to have a very hard time going much further here. There's so many gaps, but I think we can safely say that the people that were leaning, that this is going to go bankrupt, or they've completely blown it, are going to have. There's an evenness now in terms of what is a fair price and some kind of range in these companies. So I think for a lot of these big brands, and I don't know if Nike, Spotify, I don't know where the bottoms are, but we're starting to see some real panic selling. And I don't think I can't call the bottom in some of these brands, but they're not going away, and the founders are in there running them. And it's hard for me to bet against, some of these companies in this range. So, I think the tone is changing, but the macro, like you said, is the key thing. All right, I'm gonna let everybody go.
All right. Thanks, Scott.
See everybody next.